We get ourselves positioned. Here I am over here. This is it's nice over here. Yeah.
A little comfy.
Here I am over here. Well, I get over here, show off my Argyle socks.
Styling.
So it's tax time. Now what you're going to speak to isn't necessarily because it's tax time. It's just about being savvy and educated on taxes.
Yeah, and it's really being proactive, and when you're ready to have a sale of rental property, deciding what you're going to do and how you're going to defer the taxes, if you want to defer the taxes.
Yep. So I mean, the main thing we're talking about here is capital gains tax, right?
Right.
We don't want to ever teach anyone how to do things unethically, illegally. This is just to make sure you're street smart. You know, how many times do you run into people that sold real estate, didn't realize the capital gains, paid more than they needed to, and they could have repositioned it into something better?
It actually happens a lot. We get calls almost
Sadly.
every week where they say, I sold my rental property last week and I'd like to do a 1031 exchange, but at that point it's too late.
Now, we've talked a little bit about 1031 exchange on this show before, certainly the radio show as well.
Absolutely.
But I wanted Bill to break it down step by step. So we're going to show some images here that you can follow along, and Bill can explain it in a way that makes perfect sense. And then we're also going to give you his contact information if you want to reach out. So step number one, what do we do?
Step number one, you've got rental property, you've decided it's time to sell it, maybe trade up in value. Maybe you're selling a single family, you want to buy a duplex or a fourplex. And you don't want to get hit with the capital gain tax, so the next step is, how do I defer it? And that's choosing to do a 1031 exchange. And the key there is you want to make sure that you have a qualified intermediary in place, signed into the transaction before you close.
Now, that's you.
That's us.
So you need to have a 1031 specialist who's ready to bridge the gap.
Absolutely. And the key is we have to be involved prior to the close of escrow. If escrow closes, you don't have your exchange set up in advance.
All right, that's really important.
It's taxable.
So make sure you make that contact with you prior to closing escrow.
Absolutely.
All right, so that's step one. Let's go ahead and look at step number two.
And step number two is you've got the qualified intermediary in place. Your sale transaction has closed. The qualified intermediary, that's us, has now received your proceeds, your net proceeds from the sale.
So you sold a house, you made 200 grand, you're holding the $200,000.
Exactly.
Okay.
And
where do you hold it?
We hold it in a
wallet?
local commercial, in a wallet. Yeah. We just stick it in the wallet there. In a local commercial bank, and the day the sale closes, you now have 45 days, exactly 45 days, to identify what you're going to acquire as replacement property. And 45 days moves very quickly, so we've got to be careful that we start looking for replacement property with your broker as quickly as you can.
I like that you say you're a broker. So you are the intermediary bridging the gap, but you're not actually necessarily helping them find the next property. Of course, we have a whole team of all-stars that could help you.
Exactly. In fact, we work with the entire team. So our job is to just structure the 1031 exchange, make sure the legal documents are properly drafted, and then work with the client's broker of choice.
Gotcha. What are we looking at now? Step
and then
number three.
finally, once you've identified your replacement property, you then have a total of 180 days to complete your exchange. So that means you have to go into escrow and you have to close on escrow on your purchases within that 180 days.
Gotcha. And then as far as where you're going to exchange into, I think you have some what we're calling like exchanges.
Yes, and that's a key thing, and there's a lot of misinformation out there as well. It has to be like-kind property, and that's the key.
I mean, is that vague though? I mean,
it's very vague. And in fact, in the real estate context, like-kind means real estate. Any kind of real estate can be exchanged with any other kind of real estate, as long as it's held for rental, held for investment, or used in a business. So it's a very broad definition.
So what if you have an investment property that's just a single family residence? Can you reposition that into a cash flowing duplex?
Absolutely.
So that would be considered.
In fact, it's a perfect example because you're trading up in value, you're increasing your cash flow, the number of units under management.
So let's make clear. So you're going to roll the gain into a bigger, better property. It has to be a bigger, better property.
Correct.
Right? It has to be of more value. You can't go down.
You could trade down, but if you trade down, you're going to recognize some tax. So most people want to trade up in value.
Right. So typically you want to go up. So you're going to roll, in the example of the 200,000, you're going to roll that into a bigger, better property. Now that's going to allow you to skip how much in taxes?
Quite a bit now. After January 1st, it's gotten a lot more complicated. So your federal capital gain tax can be as high as 23.8%. California, your state tax can be as high as 13.3%. And then you have depreciation recapture. So all depreciation you've written off over the years.
What does this add up to?
It adds up to a lot. So personally, it could be a 35, 40% of your total profit.
35 to 40%.
That's a lot.
Why does this government have a $17 trillion debt?
Good question.
A whole new show.
Good question.
We'll have to have you on the next show
Absolutely.
for that. You know, these things can be confusing. And the reason we have you in here is because we need experts like yourself. You come on the radio show, I always learn from you. I know people that tune in this show will have a lot of questions. The smartest thing you can do with any of the information that I help facilitate here on the show is reach out to the professional. Go to Exeter1031.com. Is that the right website
yep,
for you?
That's correct.
Exeter1031.com. It's EXETR1031.com. You're going to recognize the logo that we have here behind us. You got Bill here, you got Brent Bonine, Tommy Hinson, very good friends of ours. All of the realtors who are on this show use these guys because it helps them to add more value to their clients and make sure you don't pay more in taxes than you have to. Bill?
Pleasure to be on.
Information always.
Thank you.
This information can be repurposed, given to you if you go to Exeter1031.com. Of course, CraigSewing.com as well.